Hey! Hi guys, and welcome to Macro Markets. This is Pechman, analyst and writer at Cointelegraph. Today is Friday, April 28th, and we'll be discussing the impact of macroeconomic news and events on the crypto space. We'll start by discussing the risks of an US debt default, which was raised by none other than Treasury Secretary Janet Yellen. A US debt default could spark mass unemployment, payment failures, and catastrophe that would raise interest rates into perpetuity, Treasury Secretary Janet Yellen warns. A US debt default would be a disaster for the economy, Treasury Secretary said. She warned of potential mass unemployment, payment failures, and broad economic weakness if the US failed to pay its debts. A debt default will likely result in the government failing to make key military and social security payments, she speculated. Households would also likely fail to make payments on mortgages, cars, and credit cards, causing a collapse in US credit markets. Okay, we all know this issue emerges every couple of years, creating some tension between Congress, Senate, and the presidents, but in the end, one side cedes and they raise the debt limit, right? Well, that's partially true, because if the government doesn't have majority, which happens to be the case this time, the opposition has a perfect hand to bargain their demands. In this case, Republicans want Biden to drop $4.5 trillion from spending in unsoundful projects, such as letting go some of the student debt or hiring thousands and thousands of IRS employees. Moreover, they're only willing to cede to increase the debt limit by $1.5 trillion, and believe it or not, that will likely be depleted by 2024. So roughly it's gonna last 12 to 16 months, but no longer than that. So first things first, is this good for Bitcoin? Sure. Either way, having a temporary government shutdown or ballooning the debt limit even higher shows how crucial it is to take money printing away from politics and humans in general. Are there real odds of debt default? Extremely unlikely, in my opinion. On the other hand, a selective default is possible. For instance, denying or postponing debt repayments, so the yield, for countries that are supposedly supporting Russia. Does it make a difference whether the package is $1.5 or $3 trillion? Not really. We all know that they're merely postponing the obvious. The government overspends and revenues during recession tends to decline, causing even more fiscal issues. Okay, so the next step is the Senate voting, which may request the Congress to alter it completely. The problem is, the money is likely begun by June, so there's less than 2 months left. I would not fret on this discussion, this political debate. Over the last 65 years, Congress has raised the debt limit over 70 times, and the current ceiling is $31.5 trillion. So they've lost sense of what's acceptable long ago. For Bitcoin, either way works. In the end, the debt ceiling will increase, so more liquidity go to the markets, favoring scarce assets. On to the next topic. This time we'll talk about Tesla, the EV automaker controlled by Elon Musk. But why is it important for Bitcoiners? Well, the company holds some 9.2 thousand Bitcoins, over $280 million. Although in the past, they previously held over $1 billion worth of Bitcoin, and they sold the majority, some 70%. Tesla is the poster child for the new generation of clean tech stocks, among the top 15 global tradable assets worth over $500 billion, so $500 billion. Moreover, somehow, Elon Musk became the poster child for Dogecoin, the meme coin. So his opinion on the crypto space reverberates on every possible media. Tesla reported its latest quarterly earnings last week, missing almost every analyst expectation, even after it cut its prices for the cars, hurting margins. But more importantly, it did not sell any of the 9.2 thousand bitcoins held in their balance sheet. Tesla plunged drags valuation below 500 billion on margin fear. Investors were particularly rattled by CEO Elon Musk indicating that Tesla will keep lowering prices to coax potential buyers of its vehicles. Despite significant price cuts, demand still appears challenged for Tesla, and price elasticity appears to be more muted than Tesla believed. So analysts doesn't really have a great expectation for Tesla stock price. Should there be a relationship between the auto EV producer and crypto's price? No way. But unfortunately, people tend to create FUD regarding a potential Bitcoin sell-off if Tesla's numbers continue to deteriorate. But the truth is, Tesla is currently well capitalized with very small debt levels. Moreover, the eventual sale of their Bitcoins is uneventful if executed across 8 hours or 12 hours in the market. As for Dogecoin, I imagine Elon would continue to entertain his audience even if Tesla ceases to exist. On our third and final topic, we'll explain how short selling on stock works. So unlike futures contracts, to sell a stock using margin, one needs to borrow it from a holder. Typically, those rates are negligent, maybe between 0.3 and 3% per year. However, when there's excessive betting against the stock price, so shorting, and the demand for borrowing increases, so does the rates, which can go as high as 50% or more per year. First Republic short sellers are struggling to find stock to bet against. So the Bloomberg chart shows how much per year the shorts are paying to obtain those First Republic Bank stocks to make the sale and bet against the price. The ratio has surpassed 30% per year, but in some cases it became unavailable. The semi-failed First Republic Bank saw net redemptions of over $100 billion in the last quarter, so short sellers are having trouble to borrow the stock. Does that mean it becomes impossible to bet against the bank stock price? No way. There's a huge options market for those interested. Although derivatives contracts are complex instruments, most brokers offer it to retail clients. Will Bitcoin and crypto benefit from the eventual failure of the First Republic Bank? Definitely. If the US Treasury continues to expand its emergency lending programs, more money becomes available in the street, favoring scarce assets. Furthermore, the bailout severely limits Federal Reserve's ability to continue raising interest rates. Again, positive for risk assets, including Bitcoin. Okay, let's go for a quick recap on today's show. A. Having a government temporary shutdown or ballooning the debt above $31.5 trillion is extremely beneficial for Bitcoin. Firstly, it shows that government is unwilling to cut its spending, so more money will be printed. Furthermore, it incentivizes investors to seek alternative store of value options, considering gold is only 4% below its all-time high. B. Tesla is currently overcapitalized, very small debt levels, and the eventual sale of their holdings, 9.2 thousand bitcoins, would be uneventful. The US government has way more bitcoins seized from Silk Road, some 30,000, and already announced plans to sell those over the next year. C. First Republic Bank failure is a matter of time. That would be the second top 20 bank in the US failing in a matter of weeks. It doesn't matter if it's a bailout or if the government forces another financial institution to acquire it. It shows how weak the system is, so excellent news for Bitcoin. Well, that's it for today. Thank you for watching, and remember to like and subscribe the new Cointelegraph Markets and Research YouTube channel. See you!